You can get a copy of my free ebook, Technical Analysis Basics, with one click. There is a link in the description box down below. So maybe you're new to technical analysis or you've been using it a while. There's a series of articles in this book that'll get you using some more technical analysis tools pretty much right away. It's written for beginners to intermediate, super easy to use.
Hello everybody, this is Lara with an update for Ethereum for you, 21st of December 2022. Last analysis, I'd expected a little bit more downward movement. My target was 1105. Price did move lower. It reached 1074.4. That's 30.6 below that target. It's turned up from there, but I don't think the low is in place, and I have a new target for support 986. If that's wrong, that's going to be a bit too low though. Elliott wave analysis first, classic analysis last. I've already done this work. This is a more formal style of video. This style of video and presentation is the same as I do for my membership at Pure Elliott Wave. I do Bitcoin every Monday for them in this way. Let's look at Ethereum. On the monthly chart, this is the entire price history of Ethereum. I do want to acknowledge this data is from Crypto Compare, and it's got these weird little doji candlesticks way back here. We're missing some data, I think. I've done this analysis previously with Yahoo Finance data, which I have a lot of confidence in, and full data for the entire price history of Ethereum. I have no problem with what's off to the left of the chart. This wave count fits. This wave count sees a cycle degree first wave impulse over up here in December 2018, or is it end of 2017, December 2017, sorry, and a bear market over here for a cycle degree second wave. Cycle wave 2 is a 94% reduction in market value. This is an absolutely huge and deep bear market. It doesn't look that deep though because of the scale on this chart. This is a semi-log scale, so just be aware it squishes up what's up here and expands out what's down there so that you can actually read the chart, because otherwise a market with this extreme volatility would not really be particularly legible. So I have a first wave up here, an impulse, a second wave down here, a double zigzag, another first wave over up here, again an impulse, a second wave over down here, and a third wave beginning down here, a third wave at primary degree, within a third wave at cycle degree. This is an extremely bullish wave count. This wave count expects the next bull run for Ethereum, once it breaks above resistance at the prior all-time high, should show quite a strong increase in momentum and have support from volume. That's what I'm expecting. Primary wave 2 is an 83% correction of primary wave 1, not as deep as cycle 2 was to cycle 1, but certainly very deep. 83% is very deep indeed. If it were to continue any further, it may not move beyond the start of 1 below 82.8299. This wave count, I have a lot of notations on this chart because I'm using this for my own investment purposes. I purchased some Ethereum, I think back in 2019. And so I am wanting to know how long these waves are going to be. So I've looked at the length of third waves to first waves and fifth waves to their third waves at intermediate and primary degree within cycle wave 1. Here, this third wave is 18.24 times the length of the first wave, and the fifth wave 7.93 times the length of the third wave. Here, primary 3 is 19.36 times the length of primary 1, and primary 5 is close to 2.618 the length of 3. Again, primary 5 doesn't look like it, but it's actually a lot longer in terms of price, distance travelled, and so potential profit than it is compared to primary 3. And so I'm using those numbers to guide as to where primary 3 within cycle 3 and where cycle 3 could possibly end up. That's why I've got that there, and that's how to read it. Let's take a look at the weekly chart. This high of primary wave 1 is this point up here. We're looking at the detail of primary wave 1, intermediate 1, 2, 3, 4, 5. Intermediate 4 is relatively brief and shallow. Intermediate 2 is more time consuming and it's deeper. That's really typical behavior for an impulse within a cryptocurrency. Primary 2 looks likely to be over here. It subdivides at lower time frames quite nicely as a double zigzag, and it's 83% correction of primary 1. If primary 3 is over there, then if primary 2 is over there, primary 3 should have begun, and this is a possible target for primary 3. Now, just quickly going back to the monthly chart, this third wave 18.24 and this third wave 19.36. So this target is on the conservative side. This is a Fibonacci ratio, a very extreme Fibonacci ratio for a normal market for a cryptocurrency, maybe not as extreme as it could be. Primary 3 will reach 11.09, the length of primary 1, at 54.226. So that's my possible target, highly provisional, just having a stab at trying to calculate a target for primary 3. When there's more structure within primary 3 and I can calculate it, when it's nearing the end, when I can calculate targets at intermediate, minor and eventually minute degree, I will do so, and I will try and narrow it down to a cluster of result calculations and a small target zone. Within primary 3, intermediate 2 may not move beyond the start of 1 below 896.109. This is the channel copied over from the monthly chart, and the upper edge eventually may be useful in showing where upward movement may find resistance, but I'll expect the power of primary 3 to break above resistance, backtest support, and move up and away eventually when it gets there. Cryptocurrencies, almost all of them, tend to start out new trends relatively slowly. Slow movement within a consolidation zone, accelerating through the middle and exploding at the end. So I'll expect primary 3 to start out slowly, with deep second wave corrections starting to curve up slowly. I'll expect an explosion at the end of intermediate 3 and possibly also an explosion with vertical upward movement at the end of primary 3. In years to come. We're not there yet, a long way away. At the daily chart level, let's look at the structure of intermediate 2. This high of intermediate 1 is this point up here. Intermediate 2 is fitting nicely as a double zigzag, W, expanded flat for X, Y incomplete. Classic analysis supports the view that this low may not be sustained. My classic weekly and daily charts are overall bearish, so my Elliott wave count will be overall bearish. I tried to calculate a target at minor degree and it doesn't really work considering the invalidation point, so my target is calculated only at minute degree. Within the second zigzag of the double, labelled minor wave Y, at 986, minute C will reach 0.618, the length of minute A. Were minute A and C to reach equality in length, that would bring price below the invalidation point, so that's not the ratio I'm using. I'm using 0.618 for that reason. I will also expect downward movement to find support at the lower edge of this channel, so this is going to be a really important trend line. Draw the channel from the start of intermediate 2 to the high labelled minor X here. Place a parallel copy on the end of minor W, so look out for support at this trend line, it's important. Within minor wave Y, if minute B were to continue further, it may not move beyond the start of A above 1671.48. If we see a new high above this point, prior to a new low below this point, then this would be the wave count that I would use. In the first instance, if we see a breach of this channel with upward movement, an obvious green candlestick above and not touching that trend line, that's my definition of a breach. I like to be very conservative. If that happens, then I will have confidence that intermediate 2 is likely to be over and intermediate 3 is likely to be underway. And then a new high above 1671.48 would add confidence to that view. This wave count is identical to the last one up to this high here, and instead of A, B, C, what if it was A, B, C? And I've checked this minute C on the hourly chart to see if it will subdivide as a 5-wave impulse. It absolutely will. I have no problems there. Within minor wave 1, minute 2, if it continues lower, may not move beyond the start of 1 below 1074.4. So to the downside, if we see a new low by any amount at any time frame below that price point, then we can have a little bit more confidence in this wave count, and this is my target for support, 986, but I'll also be using the lower edge of that channel as a strong guide for support. Okay, classic, and oh no, before we get there, I've got this alternate. It's possible for Ethereum, here's the end of cycle 2, it's possible that within cycle 3, primary 1, 2, 3 and 4 are all complete, but primary 4 is over twice the duration, I think, of primary 2. It's a lot longer in duration than primary 2. This is a bit unusual for a cryptocurrency, so it reduces the probability, and I just don't think that primary 3 has moved far enough above the end of cycle wave 1 for the middle of cycle wave 3 to be over yet, but it's possible. So this wave count has a lower probability. It's possible. It meets all Elliott wave rules. I'll keep an eye on it as cycle wave 3 continues. Okay, now let's take a look at classic analysis, weekly and daily charts. At the weekly chart time frame, here's the last low for the short term. I expect this low is likely to be sustained. It ends with a strong downward movement, a bullish long lower wick and a selling climax. That we also have now this downward week was quite strong, and it shows stronger volume than the previous upward week within this consolidation. Price is now consolidating with resistance eventually about 1,700 and support now about 1,070. Within this consolidation, it is a downward week which has strongest volume. So I am reading the short-term volume profile as bearish, suggesting we're possibly going to get a break below 1070 and next support below that. Probably just at the last bullish long lower wick at this last low here, but really quite a long way below that, really about 500. We've got some really strong support. I don't expect price would get down that low though. On balance volume has broken below support, back-tested resistance, moving down and away. At the weekly chart level, this is also bearish. RSI is neutral, as is money flow, and ADX indicates a downward trend. So there's a downward trend, it's not extreme, and RSI isn't oversold. I would expect the downward trend is most likely to continue. Stochastics neutral, and ATR continuing to decline as price falls and moves sideways is normal behavior for a bear market. At the daily chart level, a more short-term consolidation with resistance 1360 to 1400 and support about 1070. As price is moving sideways, volume is overall light, and it is downward sessions within this consolidation. Apart from this first one here, it's these downward sessions which have strongest volume. At this low, a strong bullish piercing candlestick pattern lacks support from volume, so we can't have confidence in it. Likewise, at this low, this is a piercing pattern, a very strong one, but not quite a bullish engulfing candlestick pattern. It too lacks support from volume, so we cannot have confidence in it. This bullish engulfing candlestick pattern from yesterday, though, does have some support from volume. It's just too far away from these lows, though, for me to have confidence that these lows are going to be sustained. I could be wrong. I hope I am, but so far it looks like these lows may not be sustained. It looks like they may be breached. On balance volume had a technically significant consolidation zone here, and a break below technically significant support is a bearish signal. It's moving down with price. It's moving down a little bit faster than price. Price is a lot further away from these lows. On balance volume is really close to this last little swing low. So again, on balance volume is bearish at both time frames. At the daily chart level, ADX is declining. There is no clear trend. RSI, money flow are both neutral, and stochastics is returning from oversold. So, with price not quite at support at 1070, stochastics just dipped into oversold, we may see a little bit more downward movement to support until stochastics is properly oversold and there for just a little while. Thank you for your support.